Good morning, students. How are you all doing? All set for a beautiful journey of this particular destination called as deductions. Now, what are deductions? See, go by the literal meaning of it first. So, deductions represents those amounts which would be subtracted, which would be deducted when you are computing your income. Now, deductions will happen at two levels. First, when you are computing the income of a particular head, Dhanalakshmi, give me 2 to 5 minutes. I'll unmute you. So, deductions happen at two levels. One, when you are computing any particular income, what is income? Income is the difference between the receipts and the expenses. So, let us say you are running a business. This is the simplest example to understand what exactly deductions are. So when you look at a business in accounts, we draw a trading P&L account. Credit side, you have the receipts. It is not income, it is the sources, it is the receipts. Debit side, you have the expenses. And when you subtract these expenses from the receipts, which we follow the matching principle, you get the net, which is the final profit or income from that business. On similar ideology, Income Tax Act, when it computes income under various heads and under each head under various sources, so it follows the similar mechanism that you subtract the expenses relevant to that particular source to derive the final income. And that is why right from salary head to other sources head, we have studied certain deductions. But they are the first level deductions where you are subtracting expenses which are incurred for earning that source of income. That is the first level deduction that you study with respective heads. Now, after you have computed incomes under each head, or rather each source first, and then after aggregating them under each head, if there is a loss, you knock off the loss against incomes, which you studied in the previous chapter of set off. Now you reach the point which is called as gross total income, which is the total of all the 5 heads. Whatever income losses you have aggregated them, and you have got a figure called as gross total income. Now comes the second level of deduction. What are this second level of deduction? That is what we call as deductions under chapter 6A. These are commonly referred to as deductions under chapter 6A. Now, what is the importance of this? The importance of this is that these deductions are not for expenses. Expenses deduction you have already claimed with the respective source while computing the income or loss of that respective source. These deductions are given with a particular perspective. What is that perspective? The perspective is wherever government wants to promote a particular nature of business, a particular area for its development, a particular saving option, or the government wants that you pay or donate to a particular institution organization for that institution's development. These are the causes which leads to this deduction. Just to give you a backdrop, around 15-18 years back, this same chapter was not there. That is why you will find the number of this chapter 6A. Whenever you have number and alphabet, you should know that it has been added later. So this was not there, but we were still getting similar benefits for making certain investments, for making certain payments, for starting a particular line of business or doing income earning or business or industrial activity in a particular area. We were getting similar deduction, but it was allowed to you as a reduction or deduction from tax, which is the third level deduction. This is the second level deduction. What is the third level deduction? After deducting this, you get taxable income. On taxable income, you apply the tax rates, either slab rates or the fixed rate. You get your final tax. Now, from tax also, you can deduct. We call it as the rebate. We call it as the relief. Sorry. So, you are allowed some deduction from the amount of tax also. So this is the third, that is the third level deduction, which is called as rebate and relief. Earlier, all these benefits were allowed in that category under section 88 called as rebate. Then later on, it was shifted from rebate to a new chapter called as deduction under chapter 6A. Here, now you are allowed a deduction from the gross total income itself, which is the second level deduction. So you have deduction at three levels. First, from respective sources to find out the net profit or loss of that source. Second, from the total of all the heads, which is gross total income, which is the present chapter. Third, after you compute the final tax from the amount of tax. Just allow me a minute. Dhanalakshmi, if you have a doubt, I'll take your doubt. So students, this is the backdrop of deduction. So just remember, deductions are at three levels. First level you studied when you are studying respective heads. This is the second level. And the third level is where some amount is allowed to be deducted from the amount of tax. Now, over there you have one major rebate called as rebate under section 87A. And there is one more deduction over there called as relief under section 89 bracket 1. I assume that you have studied that relief when you are studying salary chapter. So with this backdrop, let us start today's session. So very good morning to all of you all. And whoever has a question doubt, you can raise your hand. I'll unmute you. We'll first take up your question doubt and then I will proceed with the topic. I'm not able to unmute you, Dhanalakshmi. I'm not getting that option.
Sir,
Yes, beta.
good morning, sir.
Very good morning.
Chat is disabled, sir.
Sorry.
Chat is disabled, sir.
Chat is, so today I am also not getting some options. Technical team, Himalji. Sir, one is please enable chat for students so that they can ask me questions. Second is I am not having that option where I can unmute the students. Can you please check and yeah. Okay, let us continue, students. Now, there are two types of deductions under this chapter also. One is deductions that we are going to study in section 8080 with ABCD multiple alphabets. And other is the deduction that we are going to study under section 10AA. Let me come to the brief of section 10AA. So, where you have started a unit in SEZ, Special Economic Zone, and from there you are making exports. Then section 10AA provides you deductions for those exports profits under section 10AA for 15 years, subject to some conditions, subject to some calculation that we are going to study. So first category of deduction under this second level of deductions is deduction under section 10AA, which is given for units which have started their operations in SEZ area. And then we have a list of deductions under section 8080, which is called as deduction under chapter 6A. Now I'll read some important aspects about these deductions. So first, these are the deductions which are allowable from gross total income. Most important, these deductions are allowed only if you have exercised the option of shifting out of the default regime and you are paying tax as per the old provisions. Importantly, if you are paying tax under the new regime, out of all the deductions that are given under this chapter 6A, that is section 80, there are only two deductions, or I'll say three. Actually, two means because two are similar, so I'm calling it as one and then one more. There are only total three sections under which deductions will be allowed if you are in the default regime, that is the new regime. But if you want to claim all the deductions, you'll have to opt out of the new regime and go to the old regime. So in other words, till this old and new regime are going on, this chapter is there. The moment government decides to discontinue with the old regime, which may be 2 years, 5 years, whatever, after that, you will not have deductions of this particular entire chapter, except those three, or if in future government wants to add something. Next. Now what you have to study? You have to study the various deductions under this. Now certain deductions will be allowed on the basis of payments, like payment to certain organizations of donations or payment of certain amounts. What are those amounts that you'll come to know? Or more majorly, what we are going to study at inter level is deposits or investments in specified schemes or in specified funds. So first category of deduction, let us call it as deduction on the basis of certain payments, where it may be payment to certain organization in the form of donations, or it may be investments or deposits. So you have to pay in the form of investing your money, depositing your money in the scheme or list that they have given. Second is deduction in respect of certain types of incomes. So, where the government wants to promote a particular business like infrastructure development business or residential construction so that the people are benefited, in such cases, the government has listed out those business names. And if you are running that business, whatever you will earn from that business, that is allowed as deduction, which is the second category of deductions under this chapter. Let us call it as deductions for certain types of incomes. Now, let me inform you at inter level, this part is not applicable to you. It is not part of your syllabus. So you'll study this part in more detail at the final level if by that time all these deductions continue. And then the third category of deduction is deduction which is in respect of certain persons. Now, mainly who are these persons? These are the persons suffering with disability or disease. So for them, there is again some deductions allowed. So broadly, deductions can be classified into three categories. I'm talking about chapter 6A deduction, not that 10AA deduction. 10AA is for SEZ that we'll study separately. It is not part of chapter 6A. Chapter 6A means section 80 deductions. So section 80 deductions can be divided into three categories. One, deduction for payments. 2 deductions for certain category of incomes, 3 deduction for certain persons. Now see, this chart will give you a brief overview of all these types of deductions. Now, most important, you have to keep in mind that these deductions are allowed if you are opting out of the new scheme, right? So see here, list of deductions for certain payments is given. Here, list of deduction for certain incomes is given. Now, at present in your syllabus, only 3 of these deductions are covered. So other deductions are not covered. And then third category is other deductions, which covers deductions in respect of certain persons. So these are the 3 category of deductions. Now, what is important for you all to be noted? As I said, there are total 3 sections where you are allowed to claim deduction under the new regime or the default regime. 3 sections are 80CCD2, which is employer's contribution to pension scheme, 80CCH2, which is again similar, which is central government's contribution to Agniveer Corpus Fund. So these two are similar. And then the third is 80JJAA, where you are given deduction for hiring employees. All these in detail we are going to study. So you have to remember, out of the entire chapter, which has today more than 5050 deductions, out of the entire chapter, you are allowed to claim deduction only of 3 out of the 50 sections. Only 3 section deductions are allowed if you are in the new regime or the default regime. So wherever you are following the new regime, it is as good as this chapter is not applicable to you because there are only 3 sections applicable to you. So all these deductions are allowed only in the old regime. Now comes a very big question or challenge which people always pose to me. Okay, sir, how to remember the section numbers here? Because as you can see, all sections are section 80 and only ABCD changes. Now here, I always say that remembering in fact alphabet numbers is more simpler than remembering only plain numbers. Like all other sections are 80, not 80, sorry, you have section 4, section 6, then within 6 you have subsection 1, 1A, etc. It is more difficult to remember when it is only section numbers. But where it is alphabets, you can make out some illogical logics. I use this term. Illogical logic means you are making some point, you are making out some name, you are making out some full form out of the alphabets used. It may have logic, it may not have logic, but it is sufficient for you to remember and understand. I'll give you a glimpse of few of this. So 80D, D for doctor, and that is why you have medical related deductions here. DD is dependent disabled. DDB is dependent, first D is for dependent, and DB is diabetes. Now we can see what is written in front of that. You will be able to understand why I'm giving these full forms. E for education. Most important or most interesting, G. G for God, and for God there is donation. Right? So these are some illogical logics. These are the ones which I have created, which I used to use at the time of my exam preparations. You can devise your own. There's no such compulsion that you should follow the ones which I'm telling you. You can devise your own. But these are the ones which I have preferred, which has helped me to remember these deductions even till date. Right? So this is how this whole chapter is. Now let us go to some detailings of this chapter. Now let me tell you, this chapter questions will be majorly asked in the form of you, if you know your format of the paper, you have a comprehensive question which covers nearly all heads incomes, which covers set off also, which covers deduction also. I call it as the comprehensive sum, which is generally the compulsory question. So in the comprehensive sum, you will be required to apply this deduction. This is the first question where deductions will be required. Second questions where deductions will be required is when you are solving exclusively salary chapter sums. Over there, I'm sure if you would have seen the sums during salary chapter, you would have got some references of deductions. Third, in the MCQ type of question, which is again a comprehensive type of question because it covers nearly all chapters, out of the different questions asked, the MCQ question, one of the question will be linked to deduction. So this is how this chapter related questions you may get. Very rarely, you'll have a very specific question, one question only talking about deduction. This is also possible, but this is very rarely. So one deduction question is part of the comprehensive sum, where while solving, you are given details of different heads. Similarly, you are given details of different deductions, which you have to subtract. Two, wherever you are solving salary related sum. Three, MCQ, which is again a comprehensive sum. These are the three common questions where deduction chapters will be of use. Fourth, which is very rare, is where you have a specific question only on computing deduction, where gross total income will be given and you would be required to compute deductions of different sections. Now, moving forward, first is we try to discuss the difference between section 10 and section 80. Section 10, as you all know by now, deals with those incomes for which the tax has been, for the time being, exempted. That is, where you are not required to pay tax. So, where a particular source is kept in section 10. So, in section 10 also you have a big list, like how you have a big list under section 80. In section 10 also you have a big list. So, whatever is kept under section 10 is called as deductions. For all those items, you are not required to pay any tax because over there, the source of income, whose name is referred in section 10, is exempted from tax. However, like here some examples are given, and I'm sure you remember many of these you have studied while studying chapter on salary. This you would have studied while studying the topic of clubbing. So these are some examples of section 10 exemptions. On similar lines, you have deductions, which is in the present topic or which is called as chapter 6A deductions, and then there is one more section 10AA. Now, what is the difference? In case of deductions, deductions are not automatic. Exemption section 10 is automatic. Automatic means once you are earning agriculture income, you know it is exempt. Once you are getting HR, you know there is an exemption. Deduction will be allowed when you are making a specific type of payment. So deduction is by doing something expressly like making a particular type of payment. Right. Some deductions are again automatic, like where you are already doing a particular business. For that business, there is a deduction. But again, for getting that deduction, there are some conditions, specific conditions to be satisfied. Now, deduction is different from exemption because in case of exemption, the source of income itself is not taxable. It has been made exempt. In case of deduction, for getting the benefit of deduction, you have to expressly do something like deposit money. So that is what is the difference between deduction and exemption, which is made out over here. As I discussed earlier, these deductions are allowed only under the old regime. There are only three deductions which are allowed in the new regime or the default regime. Then about section 10AA. So section 10AA which provides deduction with respect to incomes that you earn in SEZ, and this income should be out of exports. Now comes the important point, irrespective that it is put in chapter 3, because section 10AA is put in chapter 3. Deduction in 10AA is allowed from total income of the assessee. So it is also deduction though put in chapter 3. This is why this discussion is important. Exemptions are put in section 10, but 10AA is not exemption, even though it is placed there, it is deduction. So in fact, it is correctly covered in our module here, though sequence wise it should come in the exemptions chapter. But why it is not put there, why you are studying it over here? because despite of it being section 10, it is not exemption, it is a deduction, right? So irrespective of its placement in chapter 3, deductions under 10AA is allowable from total income. Again, it is available only if the assessee has exercised the option of opting out of the default regime. This deduction is not available if the assessee pays tax under the new regime or the default regime. Yes, Riddhi.
Sir, actually, I want to tell that chat is disabled.
Okay. So
और सर
chat
मेरा
is,
क्वेश्चन था SEZ मतलब वो क्या होता है?
हाँ, SEZ beta it is, okay, I'll explain you SEZ. Now, have you seen in your area something called as industrial area or industrial zone, Riddhi?
No, sir, I'm in rural area, so no industrial area
Where
here.
are you from? Where are you from?
Gujarat.
Gujarat is a big place. Gujarat is not rural. In fact, it is one of the most developed states today. Which part of Gujarat you are in?
I'm in like अहमदाबाद से जो नीचे है आनंद वहां पे
ठीक है,
मिडल
आप
ऑफ.
आनंद में हो. Anand is
Yes.
also having industries.
Yes, sir.
Anand is
Many.
also having industries. Then you have
Yes.
Baroda, which is a very big. You have Ankaleshwar. So you have
Yes.
so many areas. If you ask someone, they will tell you it is industrial zone. So first understand what is industrial zone. Industrial zone means like, see, the area which you are where you are staying, it is called as a residential zone or a residential area because you will find all houses, maybe in the
Yes.
form of flats or bungalows or row houses. But over there, you'll have mainly people who have their homes. So it is called as a residential zone. Similarly, we have an area which is called as the commercial zone. Like you'll have certain parts, certain roads where you have all majorly the shops. All big brands are there, bigger different malls are there. So we call that area as the commercial area, right?
Yes, sir.
Similarly, you have an area everywhere. In fact, Gujarat is one of the most developed states when it comes to industrialization. You have certain areas where industries are set up. Why? Because industries require some specific permission, it requires some specific type of facilities. And since industry में जो काम चलता है manufacturing का, at times it may be hazardous for the people. That is why it is generally kept separately. So आपके इधर एक एरिया बनाया जाएगा जिसको हम बोलते हैं इंडस्ट्रियल एरिया, इंडस्ट्रियल जोन. फाइन.
Okay,
Now,
sir.
now, when industrialization started in India, when it picked up in India after 1970s, उसके बाद थोड़ा इंडिया में इंडस्ट्रियलाइजेशन को इंपॉर्टेंस मिला. उसके पहले हम एग्रीकल्चर को ही इंपॉर्टेंस दे रहे थे. देन गवर्नमेंट रियलाइज दैट इंडस्ट्रियलाइजेशन इज मोर इंपॉर्टेंट फॉर अवर डेवलपमेंट एंड देन दे स्टार्टेड डेवलपिंग और आइडेंटिफाइंग सम एरियाज जिसको हम बोलते हैं इंडस्ट्रियल एरिया. मतलब क्या, वहां पे सिर्फ इंडस्ट्रीज रहेंगी और इंडस्ट्रीज को हेल्प करने वाली चीजें रहेंगी. जैसे वहां पे वो टाइप के शॉप्स रहेंगे जो इंडस्ट्री एरिया को मटेरियल सप्लाई करते. नाउ when government was running this model, in fact, China at that time was behind India when it comes to GDP and growth rate. However, within 10 to 15 years, suddenly they found that China's growth has suddenly doubled India. And when they studied the Chinese policies, they found that they have this specific policy called as SEZ. SEZ full form is Special Economic Zone, and SEZ is nothing but like an industrial area only. Now you'll say, sir, अगर SEZ industrial area है तो जो बाकी के industrial areas already है उसमें और SEZ में क्या फर्क है? The difference is that when India started growing, industrialization started. Another thing also started developing in India, that was various type of labor laws, various types of other restrictions and other conditions on industries. So you have Industries Act, you have Workmen Compensation Act, you have so many laws which were applicable to industries. And this, in fact, led to the slower development of industry because many of these laws created a lot of restriction on the industries कि नहीं आप ये नहीं कर सकते, ये करने के लिए आपको ऐसा ही करना पड़ेगा. And then because of many labor laws, there was more problem created for industry which actually hampered industrial development and eventually India's development. And that is where China exceeded us. And since then it is today one of the most uh, China is most famous for being the manufacturing country for the world. It manufactures everything and supply to the world. We lag behind. So when our government in 1990s, they were studying their Chinese model, so they found what China did. They also had similar situation like us. But what different they did is, in order that the industries progress faster, they made certain areas or they identified certain area कि चलो फॉर एग्जांपल यू आर फ्रॉम आनंद सो दे विल से कि आनंद को हम इंडस्ट्रियल जोन तो बना रहे हैं मगर हम उसको स्पेशल जोन बनाएंगे. नाउ व्हाट इज द डिफरेंस बिटवीन अ रेगुलर इंडस्ट्रियल जोन एंड स्पेशल एसईजेड? द डिफरेंस इज एसईजेड को हम ये सारे लॉस से फ्री कर देंगे. So if you are setting up industry in SEZ, you will not be required to comply with these laws, which was the biggest hurdle in the development. So it is like now अब हम कैसे करेंगे कि हम बाकी इंडस्ट्रियल जोन्स को और बाकी इंडस्ट्रीज को सारे लॉज अप्लाई करेंगे और एसईजेड को नहीं करेंगे. So when India adopted this SEZ concept which they borrowed from China, what they did is they said कि हम इस एरिया को एक फॉरेन टेरिटरी की तरह देखेंगे. So let us say tomorrow government identifies Anand to become the next SEZ area. Already Gujarat has many SEZ areas. Maharashtra has, every state has. But let us say they want to tomorrow make Anand as SEZ. So they want to do industrialization in Anand. They want multiple industries to come and set up in Anand. But at the same time, they want Anand to become SEZ. अब वो क्या करेंगे, वो उसको बोल देंगे कि भाई आज से आनंद का ये वाला पूरा पार्ट, इतने जो 100 एकर्स का पार्ट है आनंद का जो शायद थोड़ा सा डेवलप नहीं हुआ है, शायद आज भी उधर सब फार्मिंग ही होता है या उधर आज कुछ भी नहीं हो रहा, बेरन लैंड है लेटेस्ट से. सो उस एरिया को हम बोल देंगे इट इज इंडस्ट्रियल एरिया, बट विच इंडस्ट्रियल एरिया? एसईजेड. सो एज पर द प्रेजेंट सिचुएशन, एसईजेड इज लाइक अ फॉरेन टेरिटरी. द मोमेंट यू मेक और यू ट्रीट एसईजेड एज अ फॉरेन टेरिटरी, अपने आप क्या होगा, कोई लॉ इंडिया का अप्लाई ही नहीं होगा. सो ओनली स्पेसिफिक लॉस will apply over there. Now, what is interesting, why it is called a special economic zone? Because economical laws भी, जिसमें taxation एक major law है, it is an economical law only, will also not apply. इसीलिए हम जीएसटी में भी पढ़ेंगे और अभी हम इनकम टैक्स में भी पढ़ रहे हैं कि इफ यू आर हैविंग योर बिजनेस इन एसईजेड, लेट अस से यू हैव स्टार्टेड वन फैक्ट्री इन एसईजेड, देन whenever you are working in SEZ, आपको टैक्सेशन में भी बहुत सारे बेनिफिट्स मिलेंगे. दैट इज वन ऑफ द पर्पसेस ऑफ मेकिंग SEZ. सो इसी तरीके से we copied the Chinese model and today we are getting a lot of benefit out of that model. That is what is SEZ. So it is a specific area. It is mainly industrial area, but given special status, that status is SEZ, which makes it like a foreign territory. It is the status. Is this clear?
Yes, sir. Thank you.
Yes. Okay. Now there is a differentiation given between section chapter 6A deduction, 10AA deduction versus section 10. I've already explained this. So in these chapters where you are studying deductions, you first compute your income under respective heads, and only after you make certain payments, deposits, investments, you are given the deductions under chapter 6A. Or if you are in SEZ, you are given deductions of your export profits. Whereas all those incomes which are covered in section 10, they have exemption right from the start because that is what is section 10. So let us be clear, 10AA, even though the section number appears to be 10, but it is 10AA. So it is not exemption, it is deduction, and hence we'll be studying it after we complete all deductions of section 80, which is under chapter 6A. Is this clear? Okay. Before I proceed, anybody having any questions, any doubts? Let us have a discussion of 2 to 5 minutes so that continuous monotony is broken. Because in this chapter, we'll be studying theoretical or provisional part more, and there is less of practical. So बहुत continuous explain करने से एक बार burden आ जाएगा. So let us have some discussion. Tell me anything that you have a doubt, a query in your subject of income tax. Any previous chapter, I'll first take up that and then I will proceed. Yes, students. No queries? Will allow through the entire subject. That's excellent. Okay. Now we start with this chapter. Now in this chapter, you will be taught what are the various areas where deduction is allowed, which is divided in three categories: deduction for payments, deduction for incomes. Incomes we are not going to cover because it is not part of your syllabus. Only few of the sections are covered. And third, deduction for specific persons. Yes, Nagaraja. I've unmuted you, Nagaraja. Yes, Dhanlakshmi.
So still chat is disabled, sir.
But ठीक है ना. So if you have any questions, you can ask me, na?
Okay.
Because I don't know. Technical team said that chat is enabled. I don't know what is the issue. They will enable it. Sir, please. No, for students, because this. Okay. Okay. So no problem, students. If you have anything, you can raise your hand. I'll unmute you. You can ask me if by chance for any reason you are not able to type. Fine. So no problem. You can discuss by asking the question. Okay. Now starting with this topic. Now, interestingly, as I said, this topic has around 5050 sections. Some of these sections are now no more applicable because those sections have been, some time limit was given over there, which has ended. So automatically those sections are not applicable. And few more sections which are applicable, but they are not part of your inter syllabus. So effectively out of 50, you will be studying half of those sections only. Maybe around 25, 26 sections we'll be studying, which is applicable at inter level. Out of those, few sections are very important because they are regularly asked in the exams, that you'll understand. But interestingly, there is not much calculation involved in this topic. In this topic, you have to only understand that, okay, whether for this payment, whether for this particular person, I will get deduction or not. Point number one. Point number two, if I will get deduction, what are the conditions that the person should make payment? Is there some maximum limit? Is there some percentage limit? So you have to only compare that particular payment. So visualize the exam question. You are given various payments for which chapter 6 deduction can apply. So you'll first check who is the person, whether the person is individual, HUF, company, firm, etc. Because what we are going to study at interlevel majorly is those deductions which are applicable to individual HUF, because I have been stating this in nearly every alternate chapter, alternate session, that at interlevel, mainly your syllabus covers provisions relating to individual HUF. So there are some deductions which are allowed only to individual HUFs, not allowed to company firm. Like starting majority of the sections, what we are going to study, starting from ATC, they are not allowed to companies, they are not allowed to partnership firms. So first you have to check that who is the person. Majorly or some will be of individual HUF only, but maybe in MCQ, you have to pay more attention about the eligibility of deduction. Now, you check who is the person, whether the person is eligible. Answer is yes. Also, in some cases, in very few cases rather, deduction is allowed if you are resident. So check that also, whether this deduction requires you to be resident. If yes, whether the person is resident or not. Many times all other conditions are satisfied, but simply because the person is given as non-resident, you don't get the deduction. So pay attention on that. So what you have to do in practical questions is, whenever any of these payments names will be given that you have made this payment, check who is the person. If resident is required, whether the person is resident. Then third, whether the respective conditions of all these sections that we are going to study are satisfied. Mainly the conditions would be with respect to maximum limit. In few sections, the condition would be how the payment should be made or not should be made. Like it should not be made in cash, etc. That you have to check. Main condition will be the maximum limit, because you may have made a payment of 1.5 lakhs, but the loss is no, we allow only 30,000. So you should remember that. In some cases, it is given in percentage that up to 10%, up to 20%. So that only you have to apply. And once you apply it, you find the final amount which is eligible for deduction. Now, only if you are in the old scheme, that is you have opted out, you will deduct that amount from gross total income. If you have not opted out, you will still not deduct, and despite of satisfying all the conditions, the deduction is not allowed. So this is the only practical part relevant to this particular chapter. Fine. Yes, now I think chat is enabled because I saw the first chat. So it means chat is enabled for all. Okay. Now, for what payments or for what investments deduction is allowed, we'll start from 80C. Before that, you have 80A, 80AB, 80B. All these sections before 80C are the sections which are putting some common conditions, giving you a list of conditions which everyone has to satisfy so that you are eligible for any section of this chapter. So what are those? Let us understand. So first, section 80 capital A. What it says that when you are computing your final total income, that is a taxable income, you will deduct these amounts which you are going to study under this chapter between section 80C to 80U. And you will do this only if you have exercised the option of shifting out. That is, you are going back to the old scheme. You're not in the new scheme. Second important condition that is put is your deductions cannot exceed the amount of gross total income. Now, this point I would like to explain in a bit detail because this is important. So for this, let us take a simple example. Pay attention to what I'm saying. You have salary rupees 12 lakhs. You have a house property rupees 4 lakhs. And you have interest rupees 2 lakhs. So 12 plus 4 plus 2. So it becomes 18 lakhs. Now you are given various payments for which you checked all the conditions, right person, residential status, maximum limit, and you identified that the payments, whatever you have made, or all sections combined, your deduction, eligible deduction is 20 lakhs. Whereas your gross total income, as per my example, is how much? It is 18 lakhs. Now, what does this second point or second condition says? If your gross total income is 18 lakhs, whereas your payment is 20 lakhs, or not only payments, rather, the eligible deduction is 20 lakhs, which satisfy all the conditions. You cannot deduct 20 lakhs from 18 lakhs. Your deduction will be restricted to 18 lakhs, which is the amount of gross total income. In other words, there cannot be negative deductions. In other words, you cannot carry forward these to set off in the next year. You have just recently studied the topic of carry forward and set off. That carry forward is allowed only for losses. If you have excess deductions in this year, so you, let us say, out of 18 lakhs, you have deduction of 20 lakhs, so you can adjust 18 lakhs only. So somebody will say, okay, sir, then 2 lakhs I'll carry forward and I'll adjust in the next year. That is not allowed. So what is clarified in the second point is deduction cannot exceed the gross total income. If you have excess deduction, it will lapse. But here there is one more important point which is not mentioned in this chapter, but it is mentioned in respective chapters. What is that? I'll come back to my example. Salary 12 lakhs, house property 4 lakhs, correct? Now my other 2 lakhs were interest. I will change it. It is winnings. So same amount, 18 lakhs, gross total income. But in 18 lakhs, now I have one special income. Why special income? Because it has a special tax rate. It is not falling in slabs. That is winnings. I'm sure you know what are the other similar incomes which have special tax rates. You studied in capital gain long term under 112 or 112A, and capital gain short term under section 111A. All these have special tax rates different from the slab rates. Now, 12 lakhs salary, 4 lakhs house property, and 2 lakhs is winnings. Now again your total is 18 lakhs. Again your eligible deduction, let us say, is 20 lakhs. Now this point, which is not mentioned over here, but it is mentioned in the respective chapters of capital gain and other sources, is that for these special incomes, deduction is not allowed. We studied this over there, but now you'll understand the relevance here. So technically, in this same example, when previously I had interest of 2 lakhs and the gross total income was same 18 lakhs, I could claim deduction up to 18 lakhs. But now, since I have one of the special incomes for which we studied in the respective chapter that no deduction is allowed, or chapter 6 a deduction is not allowed, what is the impact? Now you'll understand. In this case, where I have 2 lakhs of winnings income, gross total income is 18 lakhs only. Eligible deduction is 20 lakhs only, but I can now claim only 16 lakhs deduction. Why? Because the respective head has put a condition that you cannot claim Chapter 6A deduction from these special incomes. In other words, these special incomes cannot be adjusted. It cannot be reduced by making all these investments and deposits. So now in my modified example, your taxable income will be 2 lakhs and you have balance 4 lakhs of deduction because out of 20 lakhs eligible deduction, you could subtract only 16 lakhs. 4 lakh balance will lapse. You cannot carry forward. Students, I hope you all understood this point. Is this clear to all? Everything fine? Super. Good. Very good. Now, interesting point number 3. Now, we all know the concept of AOP BOI. So, it is a group of persons. Now, what it says, even for these group of persons, you have the new scheme. So, if this AOP BOI has exercised the option of going to the old scheme, that is shifting out of the default scheme, and if any deduction which is eligible to them is allowed, so they are claiming the deduction. Interestingly, what it says, no deduction under the same section shall be allowed to the members of this AOPBY. In other words, see, I will allow deduction only once. For the same investment, for the same deposit, for the same donation, I cannot allow deduction twice. So if AOPBOI has claimed that deduction, again the same amount cannot be allowed as deduction to its members. Now comes an important point. If you remember, I had said that there are 3 types of deductions under this chapter 6A: deduction for payments, deduction for incomes, deduction for persons. Now, out of this second point, which is deduction for certain incomes, it is covered in part C of chapter 6A. So chapter 6A is divided into parts. So you can just visualize there are parts A, B, C, D, etc. So some deductions are covered in part A, some are in part B, some are in part C, some are in part D. So they have divided the entire chapter into parts because it is a very lengthy chapter. Now, out of these parts, the part C or the heading C covers our second category of deduction, that is deduction for certain incomes, which is not part of your syllabus. Only 2 or 3 sections out of that are part of your syllabus. Otherwise, this is not part of your syllabus. Now, for this part, there are some important conditions. What is that important condition? If you have claimed deductions which are falling in part C, heading C, which means, as the name is given, deduction for certain incomes, if it is allowed in any assessment year, then deduction shall not be allowed under any other provisions of the Act for such assessment year. Now, what it means, try to compare it with section 10AA. That is why here 10AA is given. Now, what was 10AA? If you start a business in SEZ area, then you get deduction under 10AA. Now, interestingly, there is a possibility that the business which you are starting in SEZ area is also covered. Also means one is it is covered in 10AA. Why? Because you are starting the business in SEZ. So for SEZ, you already have 10AA. And the same business is covered in our heading C. Because as I said, what is heading C covering? Deduction for certain incomes. What are these incomes? These incomes are where you are earning from a specific business or where you have started in some backward area, etc. Now let us say this heading C covers specific businesses which we are going to not study at this level, but we are going to study at final level. But I'm giving you example: infrastructure business, housing business, hospitals with 100 plus beds, then 3-star above category hotels. All these are some specified businesses. Now let us say these specified businesses which are eligible for deduction under Chapter 6A Part C. These businesses are started in SEZ. Now what happens? You are eligible for deduction under two parallel sections. On the basis of area, SEZ, it is 10AA. On the basis of business, it is Chapter 6A. Now the question is, since you become eligible for two sections at the same time, can you claim deduction twice? Answer is no. That is what is clarified in this point, point number 4. Plus that is also what is clarified in one more point. Yes, point number 9. Now, point number 9 is comparing again the same point. What? Heading C deduction, that is deduction for certain incomes, right? So these deductions are compared with another deduction which you studied in PGBP head, that is 35AD. If you remember 35AD of PGBP, even if not, simply go back to PGBP chapter and see that. It is again giving a list of some 18 sources or 18 businesses. And over there also one business is this infrastructure, one business is hospital. So again, there is an overlap between section 35AD businesses and chapter 6A deduction C heading businesses. So what is covered in chapter 6A heading C, you will find some of the business also covered in 35AD. Now, interestingly, if you have a business which is covered in 35AD, you satisfy the conditions over there. What we studied in PGBP chapter, even capital expenses are allowed as deduction to that particular 35AD business. So you are already getting a special benefit under 35AD. If that business is also covered in chapter 6A heading C, you will not be allowed parallel deduction. So same condition. Both points, point number 4 and point number 9 are saying the same thing. If what business you are starting is having parallel reference in some other section, like in above condition or above point, it is section AA, SEZ, or in this point 35AD. So your business is covered in chapter 6A heading C also, plus covered in 10AA, or plus covered in 35AD. You can claim deduction only under one section. So same condition number 9, same condition number 4. Similar points, only sections are different. Then comes condition 5. Now, where your deduction is allowed for certain incomes, that is, we are talking again about heading C, which is not part of your syllabus, where for some specified businesses, I am giving you deduction. What does fifth condition says? The deduction cannot exceed the amount of PGBP income that you earn from this business. In other words, where I have identified that for this business, I am giving you deduction under chapter 6A. Now, when you are running a business, besides PGBP, you may have other sources also from that business. You may have HP also from that business. So when you are computing the total income of that business, you may have 4 or 5 categories of incomes. But we will allow you deduction only from the core business income. We will not allow you deduction for the other head. So if that eligible business for which I'm giving deduction under chapter 6A heading C, that business is eligible for deduction, but only the PGBP income of that business is eligible, not any other head income. That is what is condition 5. Now condition 6. Again, it is referring to point 4. So it is referring to specified business income deduction. What it says, I will allow you this deduction only if you claim the deduction in your return of income. Means what? See, as I said, deduction you have to claim separately. So after computing your incomes under different heads and getting GTI, from GTI you have to subtract these deductions. Now let us say in a year you forgot to subtract it. Will the income tax department allow you the deduction? Answer is no. That is what is given. So it is, the condition is given negatively. What this condition says? No deduction will be allowed to you in point 4. Point 4 means those specified businesses, that is heading C, if you fail to claim them in your return of income. So while filing returns, if you forget to subtract it, we will assume you don't want deduction, hence we will also not allow you. This condition applies only for heading C, that is deduction for certain incomes, not for other deductions, right? Now comes seventh point. Again, you can say it is linked to the same type of business. What? Now, I have given you a list of eligible businesses in that heading C that you start, let us say, infrastructure business, or you set up hospital above 100 beds, etc., etc. Now, let us say you are having multiple businesses. One business is this eligible business, eligible for deduction. Let us say infrastructure development. What you are doing, you are constructing 6-lane highways, which is part of infrastructure. And for that business, we give you deduction under Chapter 6A. But at the same time, you have another business where you are manufacturing steel. You have another business where you are manufacturing cement. So these are your other businesses. Now, these businesses are not infrastructure development. So they are not covered in Chapter 6A heading C. So you don't get deductions for these businesses. But interestingly, your infrastructure development business, which is highway construction, is buying cement and steel from your these two other businesses only. So your other businesses are supplying some good service to your eligible business. Now, what is this point number 7 and 8 both dealing with? What government identified that people smartly did what? When they had multiple businesses, one of which is eligible, others not eligible, what they did was within these business, if there is any transfer of goods or services, they used to manipulate the price. Now, what manipulation I will do? In my business of cement and steel, whatever cement steel I'm manufacturing, when I'm selling it to outsiders, I'm charging normal price. Let us say for cement, I'm charging 1,000 rupees per bag. But when the same cement I'm supplying to my other business, which is infrastructure development, which is eligible for deduction, I'm supplying that 1,000 rupees back for only 200 rupees. So internally, when I'm selling these goods or service, I am purposefully manipulating the price. In this example, I'm lowering the price. What is the impact? Impact is my cement business, my steel business is showing a loss because I'm selling at a very low price. But my infrastructure business is showing huge profits. Why? Because there the purchase cost is reduced, so the net profit is increased. But this is a beneficial condition for me. Why? Firstly, there is no actual loss because both are my businesses. If I'm showing lower sale price here, so I'm also showing lower purchase price here. So I'm not having any loss because both are my businesses. But from taxation perspective, I get a benefit. What? This eligible business, which is now showing higher profits, whatever profits I'm showing, I'm getting deduction. So I don't have to pay tax on that higher profits. But in doing so, I'm showing losses in these two businesses. These losses I'm setting off against my other businesses or other incomes, or I'm carrying forward to set it off in the future. So by doing this type of mechanism, I am trying to somewhat take undue advantage of the law by fabricating my transfer price. So what is transfer price? Transfer price is the internal price at which I am transferring goods and services between my two businesses. One, this eligible business, and the other is the other business. By doing so, I am trying to get undue advantage. Hence, point number 7 says this will not be allowed. We will take the market value of such goods and services while computing the incomes of these businesses. And what will be market value? In simple words, they have defined it. It is nothing but the fair market value. Correct? Ninth condition we have already discussed. Then we come to 8AB. Okay, I have some chat, so let me see what are the pointers. Neeraj says, sir, in your example, can we just transfer the material without charging any price? Yes, you can. So this is what people are doing, either not charging or charging very low price. That is why condition number 7 says the law will consider the fair market value of these goods and services which you are transferring internally, and your income will be recomputed. Nagaraja, beta, this you are going to study whether these deductions are available to companies. I already mentioned in your syllabus, the deductions which we will be studying are mainly for individual HUF. So what we are going to study, Nagaraja, will be mainly applicable to individual HUF. Whatever are applicable to companies or others, that you will get to know. Na? So wait, have patience. Or simply you can study these sections. You will get to know where deductions are allowed to companies. That you'll get to know. Now, what is 80AB? Again, 80AB applies to heading C, that is incomes from deductions for certain incomes. Now, we already studied one important condition above, condition number 9, which said that I will allow you deduction only if you have claimed the deduction in your return. Now, an added condition is, which is given over here, that this deduction will be allowed only to the extent the income is computed in accordance with the provisions of Income Tax Act. It means the deduction will not be allowed on the basis of your accounting calculation. The deduction will be allowed on the basis of your income tax calculation, in other words, PGBP calculation. So whatever is computed as PGBP income, of that I will allow you deduction. And 80AC, continuing the above condition which we studied in point number 9, where it said, I will allow you deduction only if the deduction is claimed in your returns of income. 80AC says, this return of income should have been filed within the due date of filing the returns provided in 139(1). If you file the return late, even if you have claimed the deduction in the return, which is above condition number 9, you have claimed the deduction in return, but the return is filed late after the due date under 39(1), I will not give you the deduction. So again, for this deduction under heading C, which is for certain incomes, the condition is it should be claimed in the return, and second, the return should have been filed within the due date. If you file the return late, I don't give you deduction. Now here is the list of those incomes for which deduction is allowed under heading C. As you can see, this heading C starts from 80I. So you have I, A, I, B, IAC, etc., up to RRB. Out of all this, we have only 3 sections applicable to us. That is 80JJAA, 80QQB, 80RRB. Other than this, remaining will be covered at the final level. Now, what is the effect of this condition? In case of failure to file return of income on or before the due date, the undertaking will lose the benefit of these deductions. So, specifically for this heading C, there are many conditions. It means for all other deductions which are mainly applicable to us at inter level, you don't have those conditions. So, condition is return should be, deduction should be claimed in the return, and this return should have been filed within the due date. If any of this condition is not satisfied, you will not get the deduction. So all these were conditions under 80A, AB, AC. Now we have 80B, the second section putting conditions. What it is trying to say, gross total income means the total income computed in accordance with the provisions of this act without taking the deduction under chapter 6A, because we are still going to compute chapter 6A. So chapter 6A is allowed from gross total income. Now what is gross total income? Gross total income means income which is covering all 5 heads, which is computed in accordance with Income Tax Act, then which is computed after claiming deductions, which deductions of respective heads, that is level 1 deductions, then which is after including your all clubbing incomes, which is after adjusting all your current year losses and brought forward losses. In short, what is gross total income? Gross total income is what you have studied till the previous chapter. So in previous chapter, up to previous chapter, what we studied, we first studied different heads of income, then we studied clubbing, and then in the previous chapter, you studied that whenever there are losses, you will set off the loss, and then you will get the total of all 5 heads. That total of 5 heads is called as gross total income. Now, after this 5 heads total, that is, which is up to this stage of all 5 heads set off and all, now from this total, you will subtract deduction under chapter 6A and deduction under 10AA, what we are going to study in this chapter. Dhanalakshmi is asking, sir, what is the difference between claim and filing of return? See, claim means in your computation, you have to show it as a deduction. So when your calculation, when you're calculating your income, what we are studying in every chapter, we are calculating. So you have to subtract it. If you do not subtract it, it means you have not claimed it. So subtracting it in your calculation is what is claiming in your returns. And then this return has to be uploaded on the government's website within the due date given, which is called as filing of returns. Right? Yes, Riddhi, at final level, you do have international taxation laws. Obviously, international means income tax applicable to international transactions. We are not going to study tax law of other countries. Fine, students. So these are some important conditions. Now we start with first deduction. First deduction starts from ATC. ATC has given you list of different payments. Firstly, remember, we are studying the first category of deductions where deductions will be allowed only when you make certain payments. Now you have to check two, three things. One, who is the person to whom the deduction is allowed? As I said, at your inter level, it is mainly individuals and HF only. So you have to check where individual HFs are allowed, where only individual is allowed, or when all others are allowed, like companies also. That you'll have to check. Second, in some of the deductions, the condition will be that the individual should be resident, that the HF should be resident. So check where for getting deduction, resident condition is also given. Because see, these are the minute points that will matter when you are solving the sums. Because in sums, there is no uh, specific calculation for these chapter sections. The calculations are simply you have to subtract this amount. But before you can subtract the amount, you have to check right person, check whether residential status, if required, is right. Third, apply these conditions. Mainly, the condition will be about maximum limit. Up to what limit can you claim the deduction, that you have to check. Right? Now, we start with the first section, section 80C. Now, this section covers around 22 different payments. We will study the names and then we will even see what are the conditions. But firstly, this section allows deduction only to individual HF. The individual HF may be resident or non-resident because here resident condition is not given. So when specifically resident condition is not given, it means the payment may be made by a resident person or a non-resident person. But who that person should be? It should be individual or HUF. Most important, as we already discussed, it is allowed only under the new scheme. So under the default, that is a new scheme, this deduction is not allowed. Now we'll first see what are the different payments for which this deduction is allowed. So first is unit linked insurance plan. So it is a type of an insurance policy only. So if you are paying premium for this, second type of insurance policy is unit linked plan of LIC mutual fund. So if you are making payment of premium of this, then comes the most important point, premium in respect of life insurance policy. Now here you have some conditions, but I'll discuss that condition a bit later. I'll first cover all the names. So third is also life insurance. Fourth is again type of a life insurance, which is over here called as deferred annuity plan. So if you have taken a deferred annuity plan on the life and you are paying premium, that is also covered. So you can say first four are different types of insurance policies. Now coming to fifth, where again you have taken a policy, but the only difference is you are employee of government. So where you are government employee and you have taken a specific policy, which is again a deferred annuity policy. So in fact, you can say first five are policies only. You have to just remember the name. Two are ULIP, one is life insurance, and two are deferred annuity. Out of all five, ULIP and life insurance is the important one. Remaining three will never be asked. Now coming to sixth point. Here you have studied this in salary. As an employee, you have to take a provident fund, which may be, if you are a government employee, SPF. If you are a private employee, it is only provident fund. And if that provident fund is created as per income tax law, it is RPF. If it is not created as per income tax law, it is URPF. You do not get deduction if the provident fund is URPF. But if the provident fund is SPF, that is statutory provident fund for government employees, or it is RPF, which is for private employees, whatever you pay out of your salary, which the employer deducts while paying you the salary, which we call as employees contribution. So whatever you deposit in SPF, RPF out of your salary, which is called as employees contribution, that is what is allowed over here as deduction. Similarly, you have another provident fund which is applicable to everyone. So for this, you need not be an employee. It is applicable to everyone. Even I, as a self-employed person, have this provident fund which is called as PPF, Public Provident Fund. Again, whatever I deposit in this provident fund, that is eligible for deduction. Importantly, in the first two provident fund, SPF and RPF, which is maintained by employer, where as an employee you are making the deduction, employer's contribution is not allowed as deduction to you. Why? Because employer contribution is not allowed as deduction in SPF or RPF. Again, so SPF, RPF, which is maintained by employer, which you studied in salary chapter, you have to remember, you do not get deduction for what employer is contributing. We call it as employer's contribution because in Provident Fund, you also contribute as employee, employer also contributes. So both are contributing and that becomes your total fund. But employer's contribution is not allowed as deduction in SPF or RPF, only your contribution is allowed. In PPF anyways, employer do not contribute because that fund has nothing to do with employees. Then similarly, you have another fund called as approved superannuation fund. Now comes an important policy where you have taken policy in the name of a girl child. So if you are parent of a girl child or if you are a legal guardian of a girl child, government in 2014 had started this special scheme called as Sukanya Samriddhi scheme. So where you have taken a policy which is for your girl child and you are making payment every year to that policy, that amount is eligible. Next, government has its own FD, if I can use the word, which is called as National Savings Certificate. So just for your understanding, I'm using the word FD. You take fixed deposit in bank. Similarly, this is like a fixed deposit with government. Now, presently, the scheme which is going on is called as NSC 7th issue. Why it is 7th issue? Because at different times the government has come up with different plans. Presently the 8th plan is going on. So it is the 8th issue. So if you deposit any amount in NSC, that is eligible. Then comes the next amount. Again, it is a policy. Which policy? Again, annuity plan of LIC. Then next is you have purchased some notified units. Now, whenever unit comes, I'm sure you know it is of mutual funds. It is of not on any mutual fund, it is only of notified mutual fund or it is of UTI. UTI is Unit Trust of India. Again, if you contribute in notified pension fund set up by certain mutual funds or UTI, or you have deposited your money in National Housing Bank tax saving deposit scheme. Next, you have deposited your amount again in some notified deposit schemes. Now, these deposit schemes will be first of a public sector company which is engaged in providing long-term finance for construction. So those banks, those finance companies which gives loan for construction, like let us say HDFC. What HDFC does, it is giving loans for house purchase. So if you make your deposit in such companies or in any such other company which is approved, which is again for development of town cities, you get deduction. Example given is Hudco. Again, but not important students, don't worry. Very important. You are paying the school fees. Even though the word tuition is used, it does not mean coaching classes. Here it is tuition fees. But it is out of the school fees. Now, if you see the school fee receipt, you will find payments for many things. Out of that, only one payment is eligible. The first one, which is called as tuition fees. I repeat, this tuition fee is not private coaching class fee. It is the fees that you pay for your children, either in a school or a college or a university, which is providing a full-time education. So where you are paying fees for a full-time education for your children. Now here there is a limit of 2 children. So if you are having more than 2 children, if you are making payment for all of their education, you get deduction for any 2 children's education. This is similar to what you studied in salary chapter also. Next, if you have purchased house, you take housing loan. Now, when you are repaying this housing loan, the housing loan repayment is made up of two things: cost, which is called as principal, and other is interest. Now, interest, if you remember, is already allowed as deduction under the chapter of house property. Here in ATC, you get the deduction for the principal portion. So the principal portion of housing loan is eligible as deduction. See, I'm firstly giving you the names. Then we will go to some minute details as a second part of this section again. But first, I want you to be aware of what are the different investments for which one section ATC is giving the deduction. You have other sections also, but ATC covers all these at one place. Then you are purchasing equity shares or debentures, but not any equity shares or debentures. It is only some specified equity shares or debentures. Again, practical, it is not applicable to you in exams, but as a theory, we are studying. Again, you are purchasing mutual fund units, but not any only specified mutual fund units. Now, again, what is important is you have taken a FD, fixed deposit. Two conditions: the fixed deposit should be minimum of 5 years. So it should be a 5 year or more fixed deposit, and it should be with a scheduled bank in accordance with the scheme framed by the government. Now, who are scheduled bank today? A list of this bank is given. You just remember the names. They will mention, in fact, scheduled bank in the exam. Similar to this is again the next point is again FD, but now in post office. So either you have made a 5 year or plus FD in any scheduled bank or a 5 year or plus FD in a post office. Both investments are eligible. Next, you have purchased notified bonds of NABARD, or if you are a senior citizen, you have deposited money in the senior citizen saving account. You saw you're not senior. While you are working, you deposit in this account so that when you become senior, you get payment from here. So whatever amount you have deposited in your senior citizen saving scheme, that is allowed. And last is NPS. So these are the different payments which are covered in ATC. So we have a long list. Out of this, 4 5 are only relevant, are important. And in that 4 5, there are some important restriction conditions which we will study, but we will study it after the break so that it is not very monotonous. Let me first go through the questions in the. If anybody has a question till now, please put it. Navneet is asking GPF. Sir, if I make payment to certain scheme, my wife can claim deduction. I'll come to that, Navneet. I'm purposely not going on the technical part of these sections. That I will do. First, I'm only giving you the names so that at least first you're aware of the names. Then we will go to the technical part of this. Right? Fine, students. Great. So now we take a 15 minutes break. And after the break, we will come back to this section. Again, the same payments, but some technical points in that. So at that time, I will answer your question, Navneet. NPS is better national pension scheme. Right, Harsh? Okay, students, we take our 20 minutes break. Okay, students, let us resume. Now, coming back to this section again with some technical pointers. Now, I already clarified that for this section, there is no condition that the assessee should be resident. So as you can see, there is no condition over here that the assessee has to be resident. Only it should be individual HF. So the condition of resident is not there. So first thing is clear. This section allows ATC, allows deduction for payments only to these persons. In fact, if you see, the payments are all of such a nature that they can be made by persons only. That is also interesting and important. The payments are not the one which a company can make or which a firm can make. They are all personal payments. Hence, also, it is allowed only to individual HF. Second, what is the maximum limit? Interestingly, this section has a limit of 1,50,000. So ATC individually has a limit of 150. Importantly, whatever payments are covered in this section, the total of all payments has to be compared with this 150. So 150 is not for each payment, even though you will find that this 150 is written against many of these payments. Still 150 is for entire ATC, all these 20 plus payments combined. So independently, you cannot claim for each of these payments. Yes, you have different limits under different sections. So for each section, you can take the limit separately. But within the section, for this ATC payments, all the payments under ATC combined, the limit is 150. Okay. Now, let us proceed. Now, somebody had asked me a question. Ki, sir, whether the payment made for your life, can it be claimed by your wife, etc. So now I'll give you my illogical logic. C. C for selfish. See, don't try to find logic. I've already said it is illogical logic. So C for selfish. What do I mean? This section allows deduction for payments made for selfish family. What is selfish family? See, earlier, our traditions have always believed in combined living. So we had joint families. We had families, in fact, even today, in many places, I find that entire family, right from your great grandparents, if they are alive, grandparents, and then all your uncles, everyone, they stay together as a good big family at one place. But now, slowly, steadily, being misguided and misinfluenced by the Western culture, we are shifting to nucleus family, which I am calling it as selfish family, which includes you, your spouse, and your children. Now, this section 80C will allow payment deduction if payment is made for you or your spouse. So if you are a male, it means payment for your wife, you will get deduction. If you're a female, then if you make payment for your husband, you get a deduction, or for your children. Now, interestingly, in further sections, when we proceed, you will find that there is a condition that the child or the other family members for whom you are making payment should be dependent on you. There is no such condition in this section. So whether the child is dependent or the child is independent, whether the spouse is dependent or the spouse is independent, you get deduction in either case. So C for selfish. So selfish means you are making payment either for yourself or your spouse or your children who may be dependent or who may be independent. It means what is not covered. So you will find in the question that you have made payment for your brother, for your sister, even for your parents. or grandparents. This section does not allow deduction for any one of them. So very importantly, where you are making payment for any of these persons, the deductions is not allowed. I hope this is clear to everyone. Okay, this is getting copied here. That is the problem. Okay. Is this clear to everyone, students? I'm clearing this off from my screen. So this is an important point. So somebody had asked me this question. I hope it is now clear to everyone. Aditya is asking, what is OPS? We'll come to that bit. Neeraj is asking very interesting question. Sir, spouse means current spouse. So Neeraj, what are your plans? See, spouse means the spouse to whom you are married legally. If you have a spouse to whom you have divorced, so what I think is your question intention, they are not covered. But interestingly, when it comes about children, children may be children, your children, or even your stepchildren. So if you have married a divorcee who is already having children, and those children are now adopted by you by default, so it means your stepchildren, because they are now that other person is now your spouse. So that person's children also are treated as your children. Lakshida, I have shared it with the uh, respective committee. You will get those notes in due course. So, Navneet, I think I answered this question positively, that if you are making payment with respect to your wife, you get deduction. I've already answered that. Na? I've already written that also. So spouse means your wife. Na? So if you're making payment for your wife, now I'm talking only about ATC. As we proceed, there will be different answers. But in ATC, if you're making payment for your spouse or your children, for both you get deduction. Na? No need. So I think I answered this question, your question positively, that you are allowed. Correct? Okay. I'm just clearing this off. Now, proceeding further. Now in this life insurance part is important. If you remember, we had studied something in other sources also relating to this. This is the important part. When you are taking out a life policy, firstly, for whose life you can take the policy for getting deduction under ATC, your life, life of your spouse or your children. Any of these may be dependent, independent, makes no difference. So far as you are taking insurance on the life of any of these three persons, you are eligible for deduction. Now coming the important part. We have an overall limit of 1,50,000 for the entire ATC. So all payments under ATC combined, up to 150 you can get deduction. But within this, for payment which you are making in respect of life insurance, so here obviously what payment you are making is the premium, you will get deduction up to a certain limit. What is the limit? For this, you need to see the date when the policy was taken out. If your policy was taken out up to 31st March 2012, that is before 1st April 2012 or up to 31st March 2012, whatever you say, then your maximum limit is policy amount multiplied by 20%. So maximum premium for which I will give you deduction is 20% of the policy amount. So let us say in the sum, the policy amount given is 2 lakhs. So you multiply it by 20%. So up to 40,000 of premium you can claim as deduction. Now, if in the question they say that you have made payment of 50,000 premium, you will only take 40,000. If they have said you have made payment of 30,000 of premium, you will take 30,000. So this 20% is the limit. However, if the policy is issued on or after 1st April 2012, the limit has become 10% of policy amount. So here they are using the term capital sum assured, it means policy amount. So this is the deciding line. 1st April 2012. Policy taken before this, 20%. Policy taken after this, 10%. So in the same example here, if the policy is of 2 lakhs and it is taken after 1st April 2012, then you get deduction up to maximum 20,000 of the premium. So if your premium is above 20,000, you will take deduction up to 20,000. Navneet is asking, sir, it doesn't matter from which bank account. Why bank account will matter, beta? I did not get your question. See, I have made it clear. You are making payment of life insurance premium of your spouse. In your case, of your wife. You will get deduction. How is this bank account making a difference? I don't get. See, if your wife is making her own payment, so let us say bank account means bank account in the name of wife. So if wife is making payment out of her own bank account, she will get deduction. If you are making payment from your bank account for wife's policy, you will get deduction. Sir, Aditya saying if we take ATC up to 2 lakhs, why 2 lakhs? Limit is only 150 now. So how can you take 2 lakhs, beta, Aditya? So even if in the sum, the total of all the payments under ATC comes to, let us say, 2 lakhs, you will limit your deduction up to 150. Yes.
Good morning.
Good morning, Navneet. Tell me, beta.
Yes, sir. Sir, actually, I want my
Beta, your voice is cracking. Your voice is cracking.
from his bank.
Beta, voice is cracking. I cannot understand what you are saying.
Sir, now clear?
Better. Go ahead.
Hello. Sir. Yes, sir. Sir, actually, I want to ask that if my wife is paying from her own bank account, so I can get deduction, or I have to pay from my own bank to my...
See, when it will be said that you have paid, when it is going out of your account, if it is going out of wife's account, it means she has paid. So she will get deduction for that.
मतलब अगर जो मेरी वाइफ पे करती हैं तो नहीं मिलेगा मुझे डिडक्शन.
बेटा तो उनको मिलेगा ना, जो पे करेगा उसको मिलेगा ना. Who is paying, that person will get.
Okay,
Correct,
sir.
na?
So, sir, conclusion is that I can get deduction for my spouse and my children, but I have to pay from my own account. Okay.
Exactly.
Okay, sir. Thank you.
Yeah. Now, in 2013, there was a slight variation. The variation is if the life insurance is taken on the life of such a person who is suffering with disability or who is suffering with disease. Now, both these things you will study in 80U and 80DDP. So, either the person is suffering from disability or the person is suffering from disease. Now, we just studied from 2012 onwards, the limit has become 10%. But in that, there is a small carve out. If the person is suffering from disability or disease, which are specified, then for such person's policy, the limit for deduction is 15%. So in the same case, how much deduction, maximum deduction you can claim is of 30,000. So these are the maximum amounts. Compare it with your actual premium. Whichever is lower will be eligible for deduction. But you have to remember, if you have paid for brother, sister, even though it is given that they are fully dependent on you, you take care of them, still you don't get deduction. So deduction is not for any other family member, even if you are taking care of them, even if they are staying with you, even if they are dependent on you, you will not get deduction for their premiums. You will get deduction only for your premiums or premiums of your spouse or premiums of your children. Even for parents, you don't get deduction. Even for brothers, sisters, you don't get deduction. Fine. Neeraj, sir, as science is developing, what if in future the suffering from disease person gets recovered? In that particular case, the date from which the person gets recovered, because see, in both these cases, you require a certificate, and this certificate has to be taken every year. Even today, if the person is getting recovered, not in future, let us say today, for some reason, through some yogasana and something, the person is recovered fully, which is nowadays happening very commonly. So that year onwards, you are not treated as disabled or you're not treated as a person suffering from disease. Thereafter, the limit will become 10%. It is like this, simple. So you have to prove that you are fitting in that. Riddhi Bain, beta, we will come to that section. See, other family will come under 80C or 80DD or not. That we will come to that section. Firstly, let me answer it is yes, but I don't want to mix that right now. Right now, we are talking about life insurance premium, which is covered in 80C. And for 80C, you get deduction only for yourself, your spouse, or your children. Even though ATU, ATDDB may cover other persons, but for life insurance premium deduction, if you are in ATC, you get deduction only for 3 persons premium. That is for selfish family. Is this clear? Is this understood by all? Good. Now, this was about the life insurance part. Now coming to next important point where there is some important detailing. Now when we come to Sukanya Samruddhi scheme, again we discuss that whatever you deposit in the scheme is allowed as deduction. There is no percentage limit like LIC. So whatever you will deposit, it will be allowed as deduction up to a total maximum limit of 1,50,000, which is applicable to ATC. Now here comes the second part. What is the second part? That today you are depositing money in that particular account. When you will be withdrawing from that account, what is the taxability? So whenever you will get payment from this particular account in future, so when your investment is completed and now you are withdrawing the money, at that time section 10 bracket 11A says that amount withdrawn will not be included in your total income. In simple words, it will be exempt. So effectively, whatever interest is being added in this account on whatever amount you had deposited will be exempt and there is no taxability of this interest. Is this clear? Now coming to next important point for which there is some clarification. In this particular case, no beta Divya Jain, premature withdrawal is not allowed in this scheme. So anyways, that possibility is ruled out here. Correct. So you get only on the completion of the scheme term. That is where the girl child attains the age of, I think, 18 or something. Thereafter, you can withdraw this amount. So there is no premature withdrawal possible in this scheme. Now coming to the next section where there are some detailings. What is that? So the detailings is that now we are talking about your tuition fees. I've already clarified if it is for private coaching classes, because that is where we use the word tuition fees, that is not eligible for deduction. So it should be paid to a university, college, school who are engaged in full-time education. Is this clear? Another very important thing is it should be for education within India. Now, interestingly, the school, college, university may be a foreign university. That is okay, but it should run the education in India for this exemption. So if you are sending your child abroad for studies and you are making payment of fees, you don't get this deduction. Secondly, if the child is in some education which is part-time or which is sitting at home without actually uh, being full-time in the school or college, that is also not eligible. What is very important to be kept in mind is whenever you pay the school fees, your school fee receipt covers payment for many things like development fees, ground fees, donation, etc. None of this is allowed. That is where this word tuition fees is relevant. So only the main portion of your school fees, which is called as tuition fee, is allowed, not the other portion which the school may charge extra. Not even for books, not even for uniforms, nothing. Also here, for this section, up to two children only, whatever payment you are making of school fees is allowed. Now, this restriction is not there in the remaining other payments that are covered in ATC. It is only for this particular point. Next, for housing loan, important point is it should be a residential house property and it should be covered under the head HP. That is, it should not be covered under the head PGBP. In other words, where the house is used or where the property is used in business, so it is part of PGBP head, you will not be eligible for deduction. Now, for such a residential house, whatever is the principal portion out of your housing loan repayment, that principal portion is covered over here. This portion obviously will cover the cost of the house, the stamp duty, registration fee, all these are generally merged in that. So the principal portion is allowed. Now for the interest portion. So firstly, principal is covered here. Here means ATC. Now what about the interest portion? Interest portion is first covered under section 24 clause B, which pertains to the HP head. And thereafter, you will find further sections in section 80, which also allows this deduction of interest. So interest deduction is covered in two categories, HP head first, and because if you remember, there is a limit of 2 lakhs. And if the interest exceeds 2 lakhs and you are not able to claim the remaining in HP head, you are allowed to claim it here under section 80. We will see that section later. This section 80 double E and double EAA that we'll see later, right? So these are some important detailings about this particular section. Neeraj says, sir, I am doing non-college for BCom. See, if that non-college is covered under full-time course that you'll get to know from the prospectus, your college fees will be eligible. Navneet says, but if there nothing mentioned as tuition fee but school fees, see, even if they are mentioning school fees, you have to write a note. It is presumed that the school fees means tuition fees. So then you can take the deduction. Yes, Riddhi. So the twin concept is acceptable here also. So I'm sure you know this, that wherever there is a condition of two children in the act, which you first studied in salary chapter also, then in other sources also we had, not other sources, sorry, in clubbing, you had that deduction where minor child income is clubbed up to two children only, you get exemption. And again here you have the limit of two children. Now what is the rule? If first you had one child and then again you had one child, these are counted as two. If first you had one child and then you had twins, this is also counted as two. So in short, in this case, you'll get deduction for three children. But if in the first time you get twins and then in the second time you get a single child, this will not be counted because here itself, in the first time you had two children. So only when in the first time you had one child and at the second time you had two children, this two will be counted as one. In short, all the three are eligible. This is the only scenario where three children will be eligible despite of there being restriction of two kids. Fine. Aditya, we are yet to come to 80EE. If you ask me right now, 80EE, 80G, 80F, 80Z, and if I start explaining, where will my ATC go? And if by chance you have that impatience, then please scroll your module. You'll go to reach ATC. I've already said that ATEE is covering housing loan interest again, but I cannot explain the details right now. I cannot deviate from ATC, right? Navneet, I have already answered your question that if nothing is mentioned about tuition fees, you will assume, you'll write a note saying that the school fees which are given are assumed to be tuition fees. Right, beta? Okay, let us proceed. See, there is one last payment which is covering NPS, but NPS we are going to discuss in detail when we go to 80CCD. Full form of NPS is National Pension Scheme. Right now, I'm not explaining in detail this point because we are going to cover it in the next section very soon, 80CCD. At that time, I'll give you the details of this. Now comes, what if you withdraw money from these? So like you have this life insurance policy or you have taken housing loan. Now, in such cases, when you are depositing money here, I'm giving you deduction like the life insurance premium or the cost of purchase of residential house. But what if you are withdrawing the money from these? So from these, how you can withdraw the money? By selling your house property, you get back the money. Or in case of insurance policy, you discontinue paying the premium. In such cases, what is the treatment? That is what is important to be kept in mind. So what it says, where during any year you have terminated your insurance. How do you terminate? Either by giving notice or by simply stopping to pay the premium. Now here what they say, if it is a single premium policy within 2 years from the date of commencement, and in any other case, again 2 years. In short, they are saying that you should not terminate your plan before 2 years. Why? If you terminate, what will happen that we are going to study. But firstly, for insurance, the time limit for which the policy should continue is minimum 2 years. Then comes ULIP. For ULIP, the time limit for continuing ULIP is 5 years. So you should continue ULIP for minimum 5 years. That is what is the condition. Now, similarly, for house, you should not sell the house up to 5 years. If you sell the house, there will be a problem. Now, what is this point? What will happen if you do not follow this 2 years condition for insurance and 5 years condition for ULIP plan or the house property? Then they say that whatever deduction you had already claimed, that deduction will now be added back to your income in the year in which you do the above default. So if you start paying your insurance premium after 1 year, year one, then in the second year, when you stop this or you give the notice for discontinuance, whatever deduction I have given you in year one will be treated as your income of year two. Similarly, let us say in the fourth year, you sell the house property for which you had taken loan and taken deduction in the first 3 years. Then whatever deductions you had taken in the first 3 years, that will be deemed to be income of your fourth year, the year in which you sell the house. So when I'm giving you these deductions, I'm putting some timelines within which you should not discontinue the payment or you should not sell that particular house. Similarly, for senior citizen savings scheme or for post office FD, again, the time limit is 5 years. It is already embedded in the law. If you discontinue that FD within 5 years, the amount deposited will be withdrawn. So this is what is the summary of this entire section as to deduction is allowed on what accounts. Then comes second section, which is very simple. This second section again covers premium, but it is covering premium only of one type of plan, which is the pension plan. Now, what is a pension plan? See, nowadays private employers are not giving pension. So let us say if you are employed with a private employer and after the age of 50, you want pension. What you do is you go to insurance policy, insurance company. Now it may be either LIC or it may be any other approved insurer. So when you go to these insurance companies, they have something called as pension plan, which they normally market as retirement plan. So you'll see many ads on the television, which will be either for life insurance, one, or second, medical insurance, two, or third, pension plans. Now in pension plans, till the time you are in the job you are earning, you keep on paying the premium. And after attaining a particular age, which you had already mentioned in the policy, the insurance company starts giving you a fixed amount. either monthly or annually. This is what is pension plan. Now in 80CCC, you have pension plan which is set up either by life insurance corporation or by any other approved insurer. Whatever premium you are paying, that premium is eligible for deduction. Again, for ATC, the deduction is restricted now here only to individual. Here HF is also not covered. Resident is not a condition, so the person may be resident, non-resident. Most important, here again the limit is 150. Now interestingly, when we read ATC, the limit was 150. When we are reading ATCCC, limit is 150. When we will study ATCCD, the limit is 150 again. However, there is a section which is 80CCE, which says that even though for these individual sections, individually I have kept limit of 1.5, but combined limit also is 1.5. Very important. So individually, if you are doing only ATC, 1.5, only ATCCC, 1.5, only ATCCD, 1.5. But if you are doing all of these, any two of these or all three of these, then the combined limit is also 1.5. This is very important. So individual limit is also 1.5 and combined limit is also 1.5. Thank you, Neeraj. Is this clear to all? Riddhi Bain is saying tuition fees 200 per month. Employer gives allowance of 100 per month. Yes, 100 gets exempted. Employee pays rupees 100 per month from his income. Will he get any deduction? Good question, beta. See, in this particular case, if your tuition fees is 200 per month, and if employer is giving you 100 rupees allowance, that 100 rupees is taxed differently. You will get full deduction of this 200 rupees here. So it is not that you will only get 100 rupees, you will still get full deduction of 200 rupees. So if you are paying tuition fees for your children and your employer is also giving you education allowance, still the entire tuition fees which you are paying will be eligible for deduction. Good question, Riddhi. Let us proceed, students. Now we come to a very important and very interesting section, 80CCD. Now what is 80CCD? Let us understand. So 80CCD originally was made only for government employees. What is it? It is a pension plan. Interestingly, this pension plan is made by central government or set up by central government. So in previous section 80CCC, we also had pension plan, but it was pension plan by the insurance companies, either LIC or any other approved private insurer. Now this is also a pension plan, but this is pension plan by the central government. Now originally, this scheme, when it was launched in 2004, it was only limited to central government employees because it was for central government. It was a plan set up by central government. Later on, it was extended to state government also. Hence, when you see here, the word is government. So plan is of central government. However, since now it is allowed even for state employees, so even state government and its employees can contribute to this plan. And today, this is open even to private employees. And in fact, going a step further, today it is even applicable to people like me who are self-employees. In short, in very simple words, this section allows everyone. It covers everyone. So whether you are a central government employee, you are a state government employee, you are a private employee, or you are not employee, you are self-employed, you are running your own business, own profession, all are covered under this plan today. Now, what is this plan? Again, it is a pension scheme. Pension scheme is set up by central government. That is the only thing, that the scheme is made by central government. So we call it a central government pension scheme. Name is NPS, National Pension Scheme. Later on, Modi government renamed it, calling it as Atal Pension Yojana. Everything is one and the same. Don't get confused. These are parallel words. Now, what will happen? You are employee of, let us say, a private employer. Now, definitely the private employer is not going to give you pension. But what the private employer can do, the private employer can join in this plan. Now, when the private employer joins in this plan, he will open account for each and every employee in this plan. So he will open your account also. Every month, the employer is depositing some amount, and every month, even you are depositing some amount. So this amount is getting deposited every year. Same like other plans, same like other insurance. Every year, or rather, I should say every month, you and your employer both are contributing. Now, what is very interesting point? When we were studying 80C, over there, when we were discussing Provident Fund, I emphasize on this point that only what you are contributing to Provident Fund, or for that matter, any fund which is covered in 80C, Provident Fund, Pension Fund, Superannuation Fund, whatever is covered over there, when you are contributing, you get deduction only for your contribution. Even your employer contributes to those funds, you don't get deduction. This is for 80C, this is for all other funds covered there. But when we come to, sorry, okay. Hmm. Now, in this plan, which is a pension plan only, but set up by central government, and the names are also given. Now, in this plan, what is special is what employer is contributing, that is first treated as your income from salary. This you would have studied in salary chapter. So an employer is contributing to your national pension scheme of central government. Firstly, this amount of employer's contribution becomes your salary income. First point. Now the second point. Both these contributions, what employer did, what you are going to do, both are eligible for deduction under this section. That is the beauty of this section. It gives you deduction for both contributions, employer's contribution also and your contribution also. Now comes the interesting part. Your contribution is covered under 80 CCD bracket 1. And later there is one more, 1B. Employer's contribution is covered under 80 CCD 2. Now you'll say, sir, okay, we are okay. There will be some section numbers. Why is it so important? It is important because we studied just few minutes back that there is 80 CCE. What it says, 80C plus 80 CCC plus 80 CCD bracket 1. These three sections combined, deduction is 150. Correct? These three sections combined, deduction is 150. Now, I come back to this point. Whatever you are contributing, it is covered in 80 CCD 1. Plus, there is some additional contribution by you, which is covered in 80 CC 1B. And whatever employer contributes, that is covered in 80 CCD bracket 2. Now, interestingly, this combined limit of 150 covering three sections only covers this part. It means your additional contribution and employer's contribution is not covered in the overall limit of 150. So I will now put it down like this. Pay attention. This is slightly technical, but this is important and it is interesting also. So section 80C CCC, CCD1. This deals with your contribution. Combined maximum limit is 150. Then you have 80 CCD1B. This is your contribution only, but your contribution additional. This is not covered in the 150 limit. You have a separate limit for this. And similarly, for 80 CCD2, which is employer's contribution, it is again not covered under 150. So it means when you are computing the limit for these three sections combined, you will take maximum deduction of 150, but you will take separate deduction besides this 150 of your own contribution, but some additional portion, and employer's contribution. For this, you will take deduction even beyond 150 because the 150 limit does not covers this. Navneet says, sir, if my employer does not include his contribution in Form 16, then I can claim his contribution. No. So if your employer, firstly, Navneet, this is only an academic question because as per law, it is compulsory to include his employer's contribution in your income. Even if your employer does not do, you have to recompute and include it in your income because this is what the law provides. But if I very theoretically answer your question, if employer's contribution is not included in salary, then the answer is you will not get deduction for employer's contribution also. But practically, this is not going to happen because this is what the law has clearly mandated. It is not like this optional that if employer's contribution is first included in salary, then you get deduction. That is not option given. So his contribution has to be compulsorily included, and then by default, you are eligible for this deduction. Now comes the interesting point. The interesting point is there is some amount limit, as you can see over here. All right, I'll just show you where this amount limits are given in our module. I think it is here. See. So ATC, CCC, CCD1. For this, the combined limit is 150 given under ATCCE. So for ATC, CCC, CCD1, the combined limit is 150. Then for ATCCD1B, it is outside the limit of 150. You have additional limit. And for ATCCD2, which is your employer's contribution, it is further outside the 150 limit. And here there is no monetary limit, there is only percentage limit. So this is how this entire section is giving you deduction. Yes. Correct. So what is the point? The point is that you will be getting deduction for ATC, CCC, CCD, your portion up to 150. Again, CCD 1B, again for your additional portion 50,000. And for employer's contribution, there is no amount limit, there is only a percentage limit. Now, besides that, even for your contribution, as I said, it is part of this 150 plus for your contribution, there is again a percentage limit, 10% of salary. So for your contribution, there is a percentage limit as well. So firstly, you compare your contribution, you take it up to 10% of salary here, and that amount, whatever will be coming as 10% of salary, you'll write it here. But then you will add all these three amounts, ATC, CCD, CCC, CCD, and then you'll compare it with the overall limit of 1,50,000. So if I write it like this, then so you take amount, whatever is deposited, you take amount, whatever is deposited, you take amount, whatever is deposited, but compare it with 10% of salary because 10% is the limit. So you get three amounts here and then combine this three, the overall limit is 150. So for your contribution, you have two limits. Firstly, 10% of salary is the first limit. Compare it with the amount you have deposited, whichever is lower. That amount combined with the other two amounts of ATC, CCD, the total amount you have to compare with the maximum limit of 150. I hope this is clear to everyone. Then besides that, for your own contribution, you have additional 50,000 benefit, which you can take under 80CCD 1B. And for employer's contribution, there is only percentage amount. There is no monetary amount. Is this clear? Now, Riddhi is asking, sir, who is this any other employer? See, any other employer means private. I've already mentioned. So central government, central and state government, later on private, and now even self-employed. This is how this section progressed and it reached to its present stage that today everybody is covered under this section's benefit. Jayendra Beta, I think you did not attend my previous class. In my previous class, I clarified that for slum sale, yes, I repeat, Act is giving 36 months, though conceptually it is incorrect. I had mentioned it in my original capital gain session that it should be 24 months, which I believe in the present budget, if they realize this, they will correct it. But I confirmed with the BOS and I had informed it in my previous class itself that for your exam purpose, you will take 36 months till it gets corrected. So Jaindra, make a note of this. I had informed this in my previous class itself that for the time being, till the law is corrected, you will take 36 months, which is given in the module. And in case it is corrected in this budget from 36 to 24, then we will see what our rule says, whether for which exam you'll apply 24. But remember, it has to be 24 because that is a mistake in 50B. Because the entire law is corrected for 36 months only because of some error of omission, what we call. This amendment was wrongly omitted and not made. So very soon, I'm sure whenever this mistake is identified, it will get resolved. But yes, till then, only for academic purposes, you have to apply 36 months because that is what is written. Okay. So students, kindly make a note of this part of deduction, that how this deduction applies. I'm clearing my screen. Anybody wants can take a screenshot of this because I'll be clearing my screen. Done? Now, for employees, I just said that under 80CCD1, you have a limit of 10% of salary. But there are also self-employed because now this section covers self-employed also. For self-employed, the limit is 20% of GTI. Now here a common question is, sir, when they say 10% of salary, salary means what? Because in our salary chapter, whenever we had some percentage of salary for the purpose of computing any exemption, salary had some meaning. Here also, when you are saying 10% of salary, salary will have the same meaning what you studied for the purpose of computing HRA or for the purpose of computing gratuity not covered. So salary will mean basic plus DA forming part plus percentage commission. What will be the meaning of GTI? GTI will mean your total GTI, whatever is your total gross total income minus the special incomes. So that is what is GTI, right? So for self-employed, you have to take 20% of GTI, and for employees, you will take 10% of GTI. Now we come to the second part. Your own contribution, but additional deduction up to 50,000 is allowed. So first part of your own contribution gets covered in 80CCD1, where you apply firstly the 10% limit, 10% of salary or 20% of GTI, whichever is lower, that amount is clubbed with 80C CCD, and the total of all these three sections maximum limit is 150. But besides using their 150 and 10%, you are allowed besides that more 50,000 under 80CCD 1B. So under 80CCD 1B, besides the above amount which you claimed in 80CCE of these three sections combined 150, you get additional 50,000. Now come to the third part of this deduction. In the third part of this deduction, whatever your employer contributes, for employer's contribution, you get deduction under 80CCD2. Now for 80CCD2, what is the rule? Here the rule is, if you are in the new scheme, now pay attention. New scheme allows only three deductions, only three. One deduction out of these three is this 80CCD2, important. Entire 80CCD, that is the first two parts, your own contribution, subsection 1, 1B, they both are not covered in the new scheme. New scheme allows you only one deduction, that is the employer's contribution, which is covered in 80CCD2. Now, if you are claiming deduction of this amount and you are in the new scheme, then for the employer's contribution, the limit is 14% of salary, right? However, in case you are in the old scheme, in the old scheme, the employer's contribution, if the employer is central and state government, it is 14%. But if the employer is a private employer, then it is only 10%. So this is what is the difference. So in old scheme, for employer's contribution, there are two percentages. If employer is central or state government, then you have 14% of salary as the amount of deduction. If the employer is any other means private employer, then under the old scheme, you have 10% of salary as the limit. However, if you are in the new scheme, it will be 14% of salary for all employers. So first point, new scheme allows you only three deductions. Out of this, the first deduction is this one, 80CCD2, that is employer's contribution. This is the first point. Second point, if you are in the new scheme and you are claiming this deduction, then for you, the deduction is 14% of salary, whether it is government, whether it is private employer. However, if you go to the old scheme, in old scheme, you first get the above two deductions also of 80CCD1, of 80CCD1B. You get that is both for your own contribution, plus you get contribution of employer. In case of old scheme, for employer contribution, if the employer is central or state government, you get up to 14% of salary. But if it is a private employer, you get up to 10% of salary. This is the most important point. It may take some time for you to understand, percolate, but please understand this. This is the most important part of this section. Then what they say, NPS Vatsalya scheme. What is Vatsalya? It is an NPS scheme designed for minor Indian citizen up to the age of 18. That is why it is called as Vatsalya. That is for smaller group of society that is below 18. The account will be opened and operated by guardian on behalf of the minor. When the minor attains the age of 18, the account will continue to be operational and will be shifted in the regular NPS scheme, which is called as Tier 1. Deduction under 80CCD 1B, which is the additional contribution, is allowed for any amount paid or deposited in account of minor under the pension scheme by the assessee, being parent or guardian. So if you're parent or guardian, and if you're contributing under this Vatsalya scheme, for that contribution, you can claim deduction under 80CCD 1B, which is the additional deduction of 50,000. Now, most important. Today, when you are contributing to this scheme, I am giving you deduction as we discussed above. Tomorrow, when you will start getting pension from this scheme, what will happen? So, in future, when you start getting pension from this scheme, what does the law says? The amount adding to the credit of the SSC or a minor in his minor's pension account for which deduction has already been claimed by him under this section, an accretion to such account shall be taxed in the year in which such amount are received by the assessee. So when you receive the amount from this pension scheme, firstly, the law says it is taxable. Now, how you are receiving the amount? Either you are receiving amount periodically in the form of pension, it is taxable, or when this account will be closed, you'll get lump sum amount, or when you decide to opt out of the scheme. So it is also as good as closure. In these three cases, you will be receiving the amount. Now comes the most important point. If you are receiving the amount in these three scenarios, firstly, the law says it is taxable. However, there are some exemptions. What it says, amount received by the nominee on the death of the assessee under circumstances referred to in A and B above, that is on closure of account or opting out of the scheme, it shall not be deemed to be the income of the nominee. So first exemption is if this amount is withdrawn because of death of the person in whose name the policy was taken, it will be exempt. First exemption. Second, it is further provided that amount received by a person being the parent or guardian of nominee or of a minor shall not be deemed to be the income if such amount is received on account of closure of pension scheme due to the death of the minor. So same point. You have taken the scheme in the name of minor. Because of minor's death, you closed and got the amount. That is also exempt. This is first exemption. Now comes the second exemption. Exemption from NPS to an assessee on closure of his account or opting out. So again, in case of A and B above. Now, if it is on death, it is fully exempt. But if it is not on death, in that case, what does section 1012A says? As per ATCCD, the payment from National Pension Scheme Trust to assessee on account of closure is firstly taxable, that we saw above, but there is an exemption. What is that exemption? Whatever you are withdrawing at the time of closure, it will be exempt up to 60%. In short, 40% will be taxable, 60% will be exempt. So this 60-40 applies if you are closing the account and withdrawing the lump sum amount. If you are getting monthly pension, it is fully taxable. But if it is closure, withdrawing the amount, if it is death, because of death closure, fully exempt. If not because of death, but you are closing it by your choice, then up to 60% is exempt. Now in the present budget, it is proposed that this 60% will be made 100%. So maybe in the present budget, when you may hear some amendment in section 10 bracket 12A relating to this ATCCD, that is National Pension Scheme. So whatever withdrawals you are making, that is for the time being 60% exempt. Budget, you may find a proposal that this will be made 100% exempt. Then comes the second type of withdrawal. Now the above exemption was once your scheme is fully done and you are finally closing the scheme. Second is, what if you are still in employment? That is, the scheme is still going on and you want to make a premature withdrawal. Now, when you are making a premature withdrawal, that is, your account is still going on, you are still in employment, but you need money, so you are making a premature withdrawal. In such cases, exemption will be up to 25%. So, if on closure of the scheme, you are withdrawing up to 60% exempt. If while the scheme is going on and you are withdrawing in between, which is called as premature withdrawal, then 25% is exempt. And the last part, exemption on payment from NPS trust to an assessee being parent or guardian of minor on partial withdrawal. So same, if you are making partial withdrawal, again, that is what is premature withdrawal, the scheme is still going on. In that case, again, even for minor child, up to 25% will be exempt. So whether you are making withdrawal from your own scheme on premature withdrawal, or you are making withdrawal from your minor scheme, if it is premature withdrawal, up to 25% is exempt. If it is full closure of account and full withdrawal, 60% is exempt. So this is the entire 80 deduction and 80 withdrawal. I hope everything up to this point is clear. Yes, students, anybody, any questions or doubts, please let me know. Super, super. Perfect. So students, we conclude our session here. We catch up again on 27th, which is the next part of our session. No, I think we have session tomorrow also. I don't recall. Whenever it is, we catch up again and we continue this session. Fine. Thank you all. Thank you very, very, very much. Yes. Thank you. Good day. Yes, Nagaraja, you're right. No, if you're saying deduction under chapter 6A, it is after a deduction under chapter 6A. So GTI is GTI after deduction under chapter 6A here for the purpose of 20%. Nagaraja. Very good day to all of you all students. So please read. Yes, tomorrow there is a lecture, Riddhi. I mistaken. So firstly there is a lecture tomorrow, then on 27. So we meet tomorrow again, students, for continuing with further sections. Till then, please read these sections, what we studied. Please go through all the practical problems so that you will get an in-depth understanding of the entire section. In case there is a doubt, we will discuss that tomorrow and we will proceed with further sections from this chapter. So thank you all. Take care. Let us catch up tomorrow. Good day. Good day, everyone. Bye-bye.